Hi, this video provides guidance on certain income tax matters, to include income tax credits and reliefs in relation to certain older persons and individuals caring for certain older persons. It provides information on older widowed persons with an RSI number ending with 2 letters and the last one being a W. It provides links to more in-depth guidance material on the Revenue website, available on the Older Persons Hub on the Revenue website, and to the relevant tax and duty manuals, TDMs. Before I go on, let me introduce myself. This is Paul here from Payroll Matters in Ireland, the YouTube channel, Facebook group and social media platform for all PAYE workers and their employers to ask, get answers and find out about payroll, PAYE, income tax returns, public holiday entitlements, universal social charge, pay-related social insurance, pensions, redundancy, week 1 basis, statements of liability, tax credits, employee and employer statutory rights and obligations, and a myriad of other work and payroll related issues, all free of charge. The Facebook group and Facebook page are called Payroll Matters in Ireland, and new members, followers and subscribers are always welcome. Today I want to talk to you about income tax credits and reliefs for certain older persons and individuals caring for certain older persons. In noting the challenges that some older taxpayers may face in engaging with Revenue online services, Revenue host an Age Week outreach event in their public offices annually. The last event was held in May 2024, and the intention is to run similar sessions in 2025. The aim of the event is to enhance the support available to assist older taxpayers in meeting their tax obligations, promote the ease of use of Revenue online services, and to reduce the compliance burden for older taxpayers who, for a variety of reasons, may not have access to Revenue's online services. An appointment service is provided where taxpayers can book an in-person appointment in Cork, Dublin, Galway or Limerick, or a virtual appointment which is conducted via video call. Virtual appointments can be conducted from the taxpayer's home, removing the need for them to attend a Revenue office. Appointments can be made by calling Revenue's dedicated appointments phone service at 01 738 3660. The Form 12S was designed around the needs of older and vulnerable customers. This included increasing the font size significantly and colour coding sections to make the form easier to read. The Form 12S incorporates the detail previously requested on the Form Med 1, with the intention that this makes it much easier and straightforward for this customer group to comply with their obligations and claim their entitlements. Revenue incorporated the National Adult Literacy Agency, NALA, guidelines for people with literacy difficulties when designing the Form 12S, together with input on best practices from representatives of various organisations, including the Age Action, the Irish Deaf Association and Irish Senior Citizens. We here at Payroll Matters in Ireland recently launched a step-by-step guide for PAYE taxpayers on how to claim tax relief on health, medical and dental expenses. In this video guide we tell you about all the allowable tax reliefs for health expenses, medical appliances and dental expenses, and that you can claim tax back on, and also bring you through a step-by-step guide on how to do it on Revenue frame by frame. On the step-by-step video guide we bring you through the process of claiming for the typical medical expenses like doctor's bills and prescription items, but also on medical appliances like hearing aids and exercise items, and also on food items for celiacs and diabetics. Qualifying health expenses are for healthcare you have paid for. Examples of qualifying health expenses are payments for doctors and consultants fees, diagnostic procedures carried out on the advice of a practitioner, maintenance or treatment in a hospital provided the expenses are necessarily incurred in association with the services of a practitioner, or refer to diagnostic procedures carried out on the advice of a practitioner. A practitioner, of course, is a GP or a medical practitioner. Drugs or medicines prescribed by a practitioner. Supply, maintenance or repair of any medical, surgical, dental or nursing appliance used on the advice of a practitioner. Physiotherapy or similar treatment prescribed by a practitioner. Orthoptic or similar treatment prescribed by a practitioner. Transport by ambulance. speech and language therapy carried out by a speech and language therapist, educational psychological assessments carried out by an educational psychologist, that is, one who is a psychologist who has expertise in the education of students, non-routine dental expenses, gluten-free foods purchased by celiacs and special foods for diabetics. This is what the first frame of the video looks like. And here is the link to the video. We at Payroll Matters in Ireland continue to remind medical card holders they must inform Revenue that they have a medical card in order for the reduced rate of USE to be applied to PAYE workers if they are not already on the reduced rate of USE. To determine whether or not you are on the reduced rate of USE, you must check your tax credit certificate. If it looks like this, you are on the reduced rate. If it looks like this, you are not on the reduced rate. And if you have a medical card, we advise you to apply for the reduced rate to Revenue. This is the step-by-step video. And this is the link on how to apply and how to inform Revenue to apply the reduced rate of USC for medical card holders. This is a table of some of the items we will be discussing for the remainder of this video presentation. Tax credits. Depending on an individual personal circumstances, he or she may be entitled to claim certain tax credits and reliefs. These tax credits have the effect of reducing the amount of tax payable. A full list of all tax credits is available on the Revenue website. Age tax credit. Section 464 of the Taxes Consolidation Act 1997 provides for an additional tax credit known as the age tax credit for individuals aged 65 or over. Credit is due in the year that an individual reaches the age of 65 and is granted for the full tax year. To qualify for the age tax credit, an individual must be entitled to the basic personal tax credit in accordance with Section 461. In the case of an individual entitled to the basic personal tax credit, he or she will receive an additional tax credit of €245 in the year of assessment when he or she is 65. For jointly assessed married couples or civil partners, the tax credit is €490 and is available when the older spouse or civil partner reaches the age of 65. The tax credit will be automatically granted where the individual has advised Revenue of their date of birth. The quickest way to claim the credit, if it has not been granted, is through your Revenue My Account. Example 1. John and Mary are married and jointly assessed. Mary turned 55 on the 31st of January 2024. John turns 65 on the 31st of December 2024. The full age tax credit of €490 is available to John and Mary for the tax year 2024. Example 2. Louise is single and was 65 on the 1st of December 2023. The full tax credit of €245 is available to Louise for the tax year 2023. The dependent relative tax credit is available to an individual who maintains at his or her own expense a son or daughter of the individual or his or her spouse, civil partner, who resides with the individual and upon whose services the individual is compelled to depend on due to old age or infirmity. B. A widowed father or mother of the individual or his or her spouse, civil partner, regardless of the state of his or her health. C. A parent of the individual or his or her spouse, civil partner, who is a surviving civil partner, regardless of the state of his or her health. D. A relative, including a relative of the individual or his or her spouse, civil partner, who is unable, due to old age or infirmity, to maintain himself or herself. For more information, see our video here called How to Claim the Dependent Relative Tax Credit. And here is the link to it on this YouTube channel. Home care. The home carer tax credit may be available to jointly assessed couples where one spouse or civil partner cares for one or more dependent persons. A dependent for the purposes of this credit includes a child or person aged 65 years or older. The credit is not available where the dependent is the carer's spouse or civil partner. For more information on this tax credit, see the Tax and Duty Manual, Part 15-01-29, Home Care Tax Credit. Income tax matters. Tax exemption. An individual may not have to pay income tax where he or she is aged 65 or over and his or her total income in a year is less than the exemption limit, being €18,000 where the individual is single, widowed or a surviving civil partner, €36,000 where the individual is married or in a civil partnership. €36,000 refers to the total income of a jointly or separately assessed couple and not the income of one spouse or civil partner. Where an individual or a couple qualify for this exemption and have children under 18 years of age, the exemption limit is increased by €575 per child for the first 2 children and €830 for each child thereafter. Marginal relief may still be available where total income is less than twice the exemption limit. For more information, see the Tax and Duty Manual, Part 07-01-18, Tax Exemption and Marginal Relief. It should be noted that the Commission on Taxation and Welfare recently reviewed the tax system. The Commission recommended that age should be removed as a factor for determining the charge of income tax and USC. The report stated that the determination of an individual's tax treatment based on age narrows the base and breaches the concept of horizontal equity, whereby those with similar income should pay the same proportion of that income in taxes. It also breaches the concept of intergenerational equity. Further details are set out in the report of the Commission located at this link. Deposit interest. A claimant can apply directly to his or her financial institution to have the interest paid without deduction of deposit interest, retention tax, DIRT, where the claimant or his or her spouse or civil partner A is aged 65 or over during the tax year, and B, the claimant and his or her spouse or civil partner, if appropriate, combined total income for the year is below the relevant annual exemption limit. Note, total income is essentially your gross income from all sources, for example, pensions, deposit interest, etc. The relevant exemption limit is increased if you have dependent children. To avail of the DIRT exemption at source, a Form DE1 should be completed. The Form DE1 is available on www.revenue.ie or by telephoning the Forms and Leaflets low call service on 01 738 3675. A separate declaration form is required from the account holder for each account held with each financial institution. Where DIRT has been deducted during the year and the taxpayer satisfies the above conditions, he or she can claim a refund of tax after the 31st of December by completing a Form 54 and submitting it to Revenue. Department of Social Protection Pensions. Pensions paid to an individual by the Department of Social Protection, the DSP, are taxable and should be declared to Revenue. As income, tax is not deducted at source by the DSP. If this pension is an individual's only source of income, it is unlikely that there will be any tax due, as the individual's tax credits or the exemption limit will generally cover this income. We have a video here, how social welfare benefits from the DSP are taxed. And here is the link to the video on our channel. If the individual or their spouse, civil partner, has income in addition to a pension, their tax credits will be reduced by the amount of the social welfare pension for PAYE purposes. Additional income can be declared by completing an e-Form 12 using My Account. Form 12 is available by calling the 24-hour automatic voicemail forms ordering service on 01 738 3675. Payroll Matters in Ireland are actively encouraging and assisting all PAYE taxpayers, regardless of age, to complete their own income tax returns online on Revenue My Account. They can declare additional income and claim for expenses and credits, etc., with the help of our step-by-step guide on how to complete your income tax return. And the link is here. Health or medical expenses relief. Medical expenses relief can be claimed for amounts spent by an individual on qualifying medical expenses and certain dental treatments for the individual or any other person. For more information, see our video here on how to do this. Deeds of covenant. Tax relief of up to 5% of the covenanter's total income is available on a deed of covenant in favour of a person aged 65 or over. Unrestricted tax relief can be claimed on covenants in favour of permanently incapacitated adults. For more information, see the Deeds of Covenant section of Revenue's website. On our group, Payroll Matters in Ireland, we are asked and give answers to many and varied questions in relation to PAYE taxpayers, including older PAYE taxpayers, like the Incapacitated Persons Tax Credit, contributory pensions, universal social charge, PRSI contributions, women with a W PRSI number, etc. We have had many and varied questions about older persons on our group over the past number of years. The Facebook page and Facebook group we manage are called Payroll Matters in Ireland, and new members, followers and subscribers to our channel, Payroll Matters, are always welcome. Can I just point out that if you would like to join our Facebook group, you must answer the membership question which is contained in this video called Payroll Matters in My Country Introduction and Overview, which you will find on this YouTube channel, Payroll Matters, in order to get the answer to the membership question. Here is the link to the video. The answer to some of the membership questions are also contained in the rules and in the About tab of our Facebook page. Employed persons taking care of an incapacitated individual. An individual or his or her spouse, civil partner, may claim tax relief in respect of the cost of employing a person, including a person whose services are provided by or through an agency to take care of either A, a family member, including the individual, his or her spouse or civil partner, who is totally incapacitated because of physical or mental infirmity, or B, a relative who is totally incapacitated because of physical or mental infirmity. Relative in this context includes a relation by marriage or civil partnership, and includes an individual in respect of whom the claimant is or was the legal guardian. Note, relief is not due if the carer is employed as a housekeeper only, or if the dependent relative or incapacitated child tax credit has been given in respect of the employed carer. For more information, see Tax and Duty Manual 15/01-20. Employed person taking care of an incapacitated individual. PRSI. Up to the 31st of December 2023, persons aged 66 or over were not liable to pay PRSI. Since the 1st of January 2024, an individual may draw down their state pension contributory between the age of 66 and 70. An individual will continue to be liable for PRSI until they are in receipt of the state contributory pension or reach the age of 70. Universal Social Charge. Universal Social Charge USC is a tax payable on gross income, including benefits received from employment, after any relief for certain capital allowances, but before pension contributions. USC exempt categories. A. Where an individual's total income for the year does not exceed a certain amount. The amount was €13,000 for 2024. B. All social welfare payments and similar type payments. C. Income already subject to DIRT, deposit interest retention tax. Where an individual is 70 years or older and his or her aggregate income for a year does not exceed €60,000, the following reduced USC rates apply. 0.5% for the first €12,012 of aggregate income and 2% on the remainder. For further details, see Tax and Duty Manual Part 18D-00-01, Universal Social Charge. RSI, PRSI or PPS numbers ending with a W. Before the year 2000, when some women got married, they had to use the same RSI number as their husband, but with a W at the end of the number. This W number was issued by Revenue to identify spouses in a jointly assessed relationship. The W number was linked to the RSI PPS number of the assessable spouse, which is the term used in Revenue for the spouse who is charged tax on the income of both spouses. Phasing out of the W RSI PPS numbers. These numbers are being slowly phased out, and W numbers have not been issued since 1999. Payroll Matters in Ireland, with the help of Boyle Payroll Project Management, have assisted many women, particularly widows, in receipt of a private widow's pension with income tax issues due to problems associated with the W numbers. The PPS number entered cannot access my account is one of the errors when trying to pay for your LPT, for instance. This is the error message some women get when logging onto Revenue with a 2-letter ending RSI number, PPS number ending with a W. For example, 1234567 TW. Anyone in this situation may raise their issue on the Facebook group Payroll Matters in Ireland if they have difficulty getting the matter resolved by their pension provider, Revenue or DSP. If your RSI PPS number is the same as your husband's RSI number PPS number, but the last letter is W, you must get a new RSI PPS number in these circumstances. If your spouse is deceased, if you are divorced or separated, if you were issued with a social insurance number before 1979, if you have a RSI or PPS number ending with W and you cannot access the local property tax online system using this number, you may need to request a new number. If you were issued an RSI PPS number after 1979 and before you married, the department may reissue you with your original number on request. Any woman with a W number, that is an RSI number PPS number that includes a W as the second letter, for example 1234567 TW, whose number was updated to a new distinct RSI PPS number by DEASP, you must use the new distinct RSI PPS number from the DEASP or the DSP. Please check any correspondence from Revenue or the DSP to confirm your new RSI PPS number. If you are changing your W number for a new RSI number, you do not need to go through the same application process as everyone else. To get your new number or to be reinstated with your old number, contact the Client Identity section in the Department of Social Protection, the DSP. The phone number is 071 967 2616 or local 0818 927 999. When you get your new number from the DSP, you should inform any organisation that may hold your old number, for example, your employer, your bank, the National Driver Licence Services, the HSE and Revenue. You can inform Revenue using the Revenue's online jobs and pension services or contact your local tax office. The particular issue arising with some widows in receipt of occupational pensions is that the occupational pensions provider may still be using the RSI number with a W ending, and Revenue may be issuing revised tax credit certificates under the new number issued to a widow who may still be in employment. The end result of this scenario is that the person in this situation will be taxed on emergency for the income received from the pension provider, as their system does not recognise any cert issued with the new RSI number assigned. Before I leave you for now, can I ask you to hit that subscribe button and also to turn on YouTube notifications for this channel so you can get an alert every time we post a new video guide, as we have many more helpful pay, income tax and other work related guides and videos to bring you. Go on, hit that subscribe button. Go on. See you next time.